Mercadolibre just reported another excellent, strong quarter, beat across the board. Quite used to that. Stock is up 4% or so at the time of making this video. Unfortunately, I do not know when this video will go live because there is currently an issue with regards to YouTube. I'm already uploading the block earnings review. Unfortunately, it's still processing. It's been processing for the last 30 minutes. So remains to be seen when they figure their issue out. I guess that's what happens when Google stock is performing quite well in the stock market. But anyways, with regards to Mercadolibre, it's one of my favorite holdings, one of my top holdings in my portfolio. Yes, I know, we're all waiting for a stock split, so it's cheaper to buy the stock. It's not going to be cheaper for the company because the company's valuation will stay the same. It's that the stock price will be much cheaper. Right now, it's over $1,500. So understand, those of you that do not have fractional shares or not access to fractional shares, it is quite annoying if you want a dollar cost average because you have to put down quite a lot of money. I understand. Right now, still no stock split in sight. Now, before reviewing it, I do want to touch on a couple of things here, a couple of quotes. First up, as we kick off our 25th anniversary year, we are as optimistic as ever about the growth potential of Mercadolibre as Latin America's largest e-commerce and fintech platform. We believe that we are uniquely placed to capitalize on the structural shifts that are transforming the region's commerce and financial services markets. Over the last few years, we have shown our ability to scale the business to fully take advantage of these opportunities whilst delivering continued profitability. This is a company at around market cap of $75-80 billion, growing quite fast, top and bottom line. I think this is going to be one of the largest companies on the planet for the years and years to come. Of course, it will take time, execution is key, but so far, so good. Now, before continuing, if you enjoy this type of videos, give it a thumbs up, subscribe if you have not. We really appreciate that. We're well on our way to reach 40,000 subscribers, so thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, a couple of comments with regards to commerce, more specifically the loyalty program, Meli, basically their Prime equivalent. So users who enroll in the program increase their spending and buying frequency and shop across more categories than prior to the enrollment. Engagement with Meli Delivery Day has exceeded our expectations, which shows we have succeeded in creating a compelling shipping benefit for the loyalty scheme, which is helping us to have a more competitive offer in low ASP ranges whilst maintaining discipline in our P&L. We are optimistic about the impact of Meli on future growth and retention as the user base continues to scale. Continuing here with regards to advertising, the advertising business had another strong quarter, growing revenue 64% year over year and reaching a penetration of 1.9% of GMV, up 50 basis points year over year. We saw improvements in all major markets, with Mexico standing out, particularly in cross-border. We remain optimistic about the long-term contribution of our advertising business to the monetization of our platform. On a more negative note with regards to Argentina, that had a difficult quarter in commerce with FX-neutral GMV growth of 214% year over year below inflation and items sold decreasing by 4% year over year. However, our marketplace model is resilient to this type of macro situation, so the business has outperformed wider consumption trends in Argentina. They also had a stellar performance in Brazil and Mexico and improvement momentum in Chile. They did update us with regards to a couple of reporting updates. I'm going to touch here on two. The first one is the exclusion of internal Mercado Pago peer-to-peer transfers from their TPV, approximately $7 billion in Q1 2024, which they believe creates a more relevant metric for investors to track a business that has evolved from a payments wallet into a full fintech services platform. The second one, it reclassifies Mercado Pago's interest income and expenses line from below income from operations to above income from operations. Why is that? These revenues and costs are operational in nature in a fintech business model, so this update enhances disclosure and makes Mercado Pago's reporting consistent with peers. This reclassification led to an increase of $99 million in net revenue and $44 million in cost in revenue, with a net positive impact of $55 million on gross profit and income from operations. The reclassification has no impact on net income. And so looking at the financial metrics, revenue grew 36% year over year and 30% on a comparable basis. Net income grew more than 70% year over year with strong margin of 7.9%. With regards to revenue, in Brazil, that grew strongly 57% year over year. In Mexico, 59% year over year. Of course, this offset the drop in Argentina's revenue following the devaluation of the Argentine peso. Commerce monetization improved year over year with higher ads penetration and lower Argentina mix. So commerce net revenue per quarter that increased year over year by 113%. Commerce product sales, 368 million. Commerce services, 2.21 billion. And with regards to commerce take rate, we can see an improvement quarter over quarter and year over year, with the largest increase here in shipping fees. So they say here 2.6 percentage points of this overall gain was due to the increase in shipping revenues where Mercadolibre is considered principal, with revenue booked on a gross basis, as explained in the Q1 shareholder letter. This was the third reporting change. Continue here with regards to the fintech side, so higher take rate in Mexico and Brazil on an annual basis, offset by Argentina. So if you look at the fintech rate right now, Q1 2024, 4.5%, an increase quarter over quarter. It's down year over year. With regards to fintech net revenue per quarter, that has increased 74% year over year. With regards to gross profit margin, so broadly stable gross margin on a comparable basis despite pressure from Argentina. If you look at the year-over-year comparison, gross margin Q1 2023 recast is down 400 basis points. If you look at the comparable one, down 30 basis points. We see here a positive impact with regards to cost of products sold, plus 50 basis points from lower MPOS sales, minus 10 basis points due to first party. As for income from operations, a bit of the same here. Strong performance in Brazil and Mexico drive year-over-year margin expansion on a comparable basis, as you can see, up 120 basis points, but on a non-comparable basis, it's down 90 basis points. Net income margins were up on both sides here, so gains led by strong operational performance and easing distortions from Argentina's dual FX rate. So we can first see on a comparable basis up 240 basis points, the other one up 160 basis points. Cash flow generations remain strong, partially offset by Argentina. You can clearly see that this report really focuses on the negative aspect of Argentina right now. I think in the long term, it's still going to be a tailwind for the company and probably for the continent as well. Cash flow from operations amounted to $1.5 billion, fueled by robust quarterly income from operations. And so overall, I think it's pretty clear this business is growing. It's growing in a profitable way. It just becomes bigger and better over time. It's one of those holdings in your portfolio where you can really sleep well at night because you know that one, management is really world class. They have been executing quite to perfection in the last couple of years. So yeah, one of those companies in your portfolio where you rarely have to worry about. And so right now, if we look at what the stock is doing, the stock has had a nice rebound in the last 2 weeks. We were under $1,400, which of course still is expensive if you don't have fractional shares. But right now we have momentum back. We're over the 200, the 50 and the 20-day moving average. RSI is also looking like we're going to get some more momentum going for the stock. And so to conclude, nothing more to add here. Another excellent quarter by Mercadolibre, by management. I mean, sometimes you really have to look at Latin American top performers, for example, Nubank, Mercadolibre, and say, bravo, because, I mean, some American and some European companies could definitely take some lessons from these guys down there. So that's about it for this video. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.